Hey guys, it's Chels. So June was a really good trading month for me. I was actually able to lock in $30,000 in trading profits, and that is something that I've been trying to do for a while now. I've had a 30K month before, but I honestly haven't had one in a while. That's why it makes this super exciting to share. And honestly, if you know me, you know that I don't typically share results like this because I don't want it to come across as bragging, flexing, showing off. But I do think that there is an importance in sharing transparency while documenting that. And hopefully, it helps some of you and adds value. And the thing that's super crazy about this is when I stopped trying to force a 30K month, honestly, it just naturally happened. Like when you try to force a goal, you notice that you kind of start to pull away from that goal. But I think when you forget about it and you focus more so on the process, that's when everything happens. So, I want to break down what made June so successful for me because I think it's a perfect example of the difference between systematized trading versus what most traders do, which is emotional gambling. I'm going to show you some of the actual trades that I took from June and actually walk you through my thought process when taking these trades. But most importantly, I think I want to highlight the traps that actually destroy traders' accounts and how I was able to navigate that just from the way that I approach the markets. So, let's get into it.
So this is going to be the first trade that we're going to go over. This trade I made $3,368. It was for a gold short here. So I feel like my experience was with this trade specifically was like I kept seeing the same setups just throughout June. I kept seeing the same setups appear throughout the month. And I feel like this trade really kind of showed like the patience and really being patient enough to wait for setups like this. It was a pretty crazy trade. I don't even know if many of you were trading gold when it was looking like this because this was just like super nasty, right? Like we're looking at it on the 15, so much consolidation, so much sideways movement here, and it just looks super choppy. And typically, like when typically we are taught to not trade choppy markets. And so when it's super messy like this, I myself am also very cautious when it comes to that. But because I am a scalper, I actually thrive in market like ranging markets and markets of consolidation because I'm not in for a very long period of time. I'm in and out. So when I see this, it is a little hard to gauge on the lower time frame just because there's so much noise here. So I do want to reiterate that because I scalp, it does not mean that I don't look at the higher time frame. I feel like the higher time frame, if anything, has really added more accuracy to my scalping because at the end of the day, everything comes from a higher time frame narrative, right? You want to build that higher time frame narrative down to lower time frame. And in this case here, I do start on the daily. I do start on the weekly as well when a new trading week starts. But for this example, I am on the daily here just to show you that when price was coming into this, it did make sense for sells here just for the fact that we did sweep liquidity. I'm also someone who's huge on liquidity and being able to understand what drives the market and how the market actually moves. And in this case here, I would look at this as a sweep of liquidity, especially on the higher time frame. If I don't see a sweep of liquidity on the higher time frame, I will kind of sit it out. I will drop down to the lower time frames, but again, that's kind of just more noise, and I want to make sure that the higher time frame narrative makes sense, right? Because you can still get smacked on the lower time frame if you're blindly just following like the 1 minute, anything from the 5 and below. If you're blindly following that, it can work if you're really in and out, but to really get a better, take profit area, I feel like logically, and a better entry at that. I feel like logically it's just better to start on the higher time frame. So again, here in the daily, we had a sweep above. It created our new daily high here. And from there, I'm looking at this high to obviously not get ran through at least for a while, right? Because this is also the daily. Now I do see that this candle is forming and it tapped into a daily POI. So POI is something that I look for as in terms of just like an area of interest. And I typically will mark my areas. I used to mark it with the rectangle box, but now I use a horizontal array a lot. I feel like it's a lot more accurate, and I feel like it doesn't add so much clutter on my charts. Like my charts, and if you've been following me for a while, you know how minimal my charts are. I don't like a lot on my charts. I feel like it's easier for me to see with less things on the chart. So when I do see a higher time frame POI like this, where I would like to see price visit back into, I will mark it, and that's when I'll drop down to lower time frames. So I do like the 7 hour a lot. I feel like the 7 hour is great. It has a great point of view. You know, you pick your different time frames on what actually makes sense to you, but I use a 7 hour a lot. And in this case, it does look pretty choppy as well. So I didn't really base too much of my analysis here. If I don't see anything clear on the higher time frame, other than the fact that we did break structure here, so this is also confirming that higher time frame narrative, and we're potentially shifting bearish here. So this is another confirmation for me on the 7 hour to go ahead and mark this as that break of structure, because we did break a low. Okay, so this is just confirming to me that on 2 time frames already, that we've had a sweep, and we've also had a break of structure in the opposite direction. So that gives me more confluence and confidence to enter for shorts. Okay, so dropping down to the 4 hour, I see the 4 hour here. It still looks pretty messy. If it still looks super choppy, I'm the type of person that will look on the line chart. The line chart for me is super, super important, especially because I scalp, right? Because the line chart for me shows where true price has closed. The candlestick body closes, right? It doesn't really include the wicks on the higher time frame. I mean, on the line chart. So that's what I'm typically like looking for. So when I switch to the line chart here, I do see that liquidity has been swept on the 4 hour, and this is our new 4 hour high. So therefore, it doesn't really show it super clearly, obviously, on the candlesticks. So whenever I do see on the line chart, I do trust this, right? Because I've back tested this multiple times in the past, and it's helped me so much. So now that I see that this 4 hour high here is holding, and we also confirmed a break of structure right here on the line chart as well. This is something that I also note. If I see a break of structure as well as a liquidity grab or sweep, then I will mark that as an importance to me. So then I'll go back here again, lows broke, and then I will drop down to the lower time frame. But I now know that that 4 hour high that just was created should hold, right? If we're pushing in the opposite direction, and it's already confirmed from that 7 hour break of structure to the downside. So that's exactly what I'm looking for. On the, I believe what it was more clear. So I do use the 1 hour and the 2 hour. It depends. Sometimes like the 2 hour is a lot more clear over the 1 hour, but it just, you know, it really depends on how it looks. So in this case, to me, I felt like the 1 hour was a lot more clearer. Again, this was pretty this is pretty choppy to look at, right? But again, I pay attention to liquidity. So here I see a liquidity grab. I pay attention a lot to wicks. I'm very meticulous when I'm looking at wicks, because wicks is part of transactions, right? It's part of order flow, right? So the volume of orders sit within the candlestick, but I feel like a lot of manipulation and liquidity grabs happen with the wicks itself. So when I see this, I pay very, very close attention to that. So obviously we have a sweep of liquidity right here. Again, we confirmed it with that break on the 4 hour that we had marked up right here. And so I'm looking at this as, again, a 1 hour high to not be rated. Okay, I'm looking at this high as potentially a protected high as of right now. So I'll go ahead and just mark that so I know where I'm at. So I know if this is my 1 hour range here, we typically know that in order to continue bearish here, price would need to retest in that area. So now it comes to looking for a retest in this area. Sorry, so we'll drop down to the 15-minute, and this is essentially kind of where I got my entry here. As we can see, we have a 15-minute range, we have a break of structure here, and typically price will dip back into that break of structure. So it went ahead and previously visited that break of structure prior. It did not create a full move to the downside yet though, and I do pay attention to moves like this because it is a liquidity trap. So then I will wait for sellers to get taken out again, and then wait till they get taken out, wait for a POI on the lower time frame. And in this sense, I also look at the 7-minute as well. And the 7-minute, we have a POI sitting just above here. So this was something that I was also eyeing when this move happened here. We tapped into that 7-hour POI. I waited for a reaction. Reaction came on the 1-minute, gave me a good reaction here. Even on the 3-minute. 3 and 1 are my two time frames that really give me good confirmation. In this sense, the 3-minute looked really, really well. It created that structure to the downside, started pushing, and this is where I entered. So right after I entered, I had definitely marked and put my stop loss just above that high above the candlestick body. So that's typically where I'm placing my stop loss in just logical areas. I could have definitely placed it to this previous 7-minute POI, but I felt that that was a bit too large of a stop loss. So I want to be proactive in making sure my stop losses are very, very tight. That's just how I trade. And if I get stopped out at break even or I get stopped out, it's all good. I will typically re-enter on the position. But yeah, this trade was just so amazing. And you guys know that I don't typically hold trades this long, but what I'm trying to work on is like holding runners, right? Because when I do see volume come into the market, I will trail my profits ASAP. But if there's no volume, I'll typically move my stops to break even. And in this case, I moved it to break even because of how choppy it was prior when all of this chop was happening. And then I just let it run, right? And then eventually like hit TP to around 33.49.30 area. So yeah, this was a really, really good trade. And this helped me like, this was a good trade in terms of like patience. Okay, guys, so here's my second trade, and I do want to also point out like after hitting around like 25K, I really focus on protecting what I built rather than pushing for that 30K target. I feel like it's the same in a sense of like prop firms, right? You're so close to hitting that profit target goal that you kind of forget about risk management. It kind of just flies out the window because you want the profit and you tend to be greedy, but it's literally at the wrong moment. So when you're so close to hitting that goal, you tend to just over leverage and you don't care, and then it just fucks up your whole account. Like just literally brings you back to break even, or like even worse, like you just end up blowing the entire account. So I think for me, like that was the most important thing. As I got higher in my profits, I really just focused on like protecting my capital, because at the end of the day, like I know it's gonna mess me up if I focus on the goal and then I get sick to my stomach knowing like I've tried to push for more, but it ends up in like a loss, a really bad loss, or like I go on tilt or something. So I'm not so focused when it comes to that. But yeah, just quickly, this is again on gold. It was another short here. On the 2 hour here, I feel like it's very self-explanatory. Again, I go based on liquidity. So for me, as soon as I saw this liquidity grab here on the 2 hour, it really made sense to me, right? And again, confirmed it on the 2 hour as well. We broke structure here, but on the lower time frame, we can get a kind of a better view here and why I kind of initially entered. So that 2 hour was already the biggest confluence for me, and I believe let's look at the higher time frame as well. Yeah, so the higher time frame here as well, like again, pretty choppy on the daily, but when we go to the line chart, it gives me a lot more clarity. So I am looking at this high to be rated, right? So again, liquidity been taken, and it does show that on the 2 hours. So for me, this was a crucial area in terms of like this would be kind of a daily POI area that I'm looking to get that entry in, right? Again, with using this as a trap or a liquidity to get it, go ahead and get into my position. So I'm looking at that right off the bat. I don't spend too long on the higher time frames. Like if I see it, I just see it. And I feel like a lot of us kind of also get that same experience. It's like once you see something very clear in the charts right when you open it, like you kind of just roll with it. There should be no second guessing when you're looking at the chart. No reason why I should be on the chart for more than like 15-20 minutes, because at that point I'm just trying to force a setup that's not there. And this I saw right away, and especially on the 7 hour here as well, we have a 7 hour high that's been holding, price comes up into it, we have this POI area that was also an interest to me, seeing that if we could hold this, right? And in this case we ended up holding this. And I also liked how price was looking towards the downside. We did create a lot of trend line liquidity. I don't use trend lines as a confluence to my entry points, but I do use trend lines in terms of understanding where other traders may be in the market. So this is typically what I look for, and that gives me that extra confidence to enter a position, right? Because I know eventually we want to take that liquidity out. So we go down to the 1 hour again. Actually, like I said, it was up clear on the 2 hour. We drop down to the 15. Okay, and I'm just patiently waiting at this point, right? Patiently waiting, sorry, for the 15-minute high to form. So we have that 15-minute high that forms here. I'm looking at this as a protected high. Price should not raid this high here. Once I get that test right here around 33.74, I do go ahead and take shorts, right? And obviously this came at a good time. There was volume in the market happening. And on the lower time frame here, we had the test on the 5 minute. So we have a little we had a little 5 minute range here, right? Price came up to around 33.73. And once I saw price test back into this 5 minute range and we started dipping down, and this happened like pretty fast, right? Because it pushed up here for a second and then it pushed straight down. And once I saw this create a little POY on the lower time frame as well, I'm like, okay, enter right at this, right at the break and retest area of this as well. So that kind of gave me just extra confidence to enter this position. And of course, it ran for a good amount too. And logically, my take profit area was previous lows, which would be this area. Okay, definitely could have held it longer, but again, I don't typically like to hold my positions that long. But yeah, this trade was great, and I definitely tried my best with protecting my capital for this trade. Okay, so here's another trade, and this was obviously a loss. This was, I feel like it was a pretty good loss though, because in my experience, I feel like my trade decisions now came from literally years of systematic development, like with my trading system and like refinement. And I feel like that allows me to make educated judgment calls within like my own framework. And regardless if a trade turns out to be a winner or a loser, like I still follow my plan. Like if I personally see it there in my face and it gives me like some sort of confirmation to enter, like I'm just going to enter it regardless, right? I'm not afraid of execution. I'm not afraid of risking anything. So to me, this was a good loss because I basically followed my plan. I mean, obviously, it looks so obvious here, right? To not take sells just yet. I was a bit too early, but it is what it is, right? We can't win every single trade. And I feel like most traders give back all their profits again by being greedy. And also, aspiring traders think that they need like these really like strict rules, but I feel like real success comes from developing like a deeper understanding of yourself and of your system. And to me, that makes execution feel a lot more natural. So I don't really need to explain too much like with this setup here. I mean, it was a pretty obvious like bad trade here, right? Again, I was too early, was going for the scalps down here, but I failed to realize, especially on the higher time frame, that we already had taken liquidity. Obviously, it's manipulation here, right? Because price did end up closing above previous low, so I wasn't seeing that, right? And clearly on the higher time frame, especially on the 1 hour, like no lows on the 1 hour were broken, so um, it wasn't time to take any shorts just yet, especially with all that's happening up here. So that's what I failed to realize. Usually, whenever I do lose a trade, it's more so because the higher time frame is telling me something different, and I'll overlook it, or I'll let the noise on a lower time frame kind of distract me from that. But in this moment here, I felt that this was a good high that would hold at least up until this area, right? Like although I had my take profit all the way down here to these lows, like if price did go ahead and respect this area here, it would have definitely been a shorter scalp. I would have then had waited to at least midway point of this trading range and then definitely move stops to break even or trail with volume. So yeah, that was me on my part. But yeah, this is a trade that I did actually lose on. I lost $8,000 on this trade. Okay, so this is the last trade that I'm gonna go over, but this trade I won $2,500 on this. So I feel like with this trade, I didn't really second guess my approach or try to, like I was saying, like just push for that 30K this month. Like I just continue to execute the way that I always do, like regardless of the outcome. And I honestly feel like most traders again constantly tweak or like they doubt or abandon their entire approach before they can actually like compound is because again they're overlooking the good decisions when their emotions like come into play. So like for me, like right off the bat here on the 15, I can definitely say like it's not one of my best entry points for sure. Like I don't think it was an ideal entry point, but I just executed in this moment and I didn't let my emotions affect that. Like, oh, what if price comes back up to run these highs, right? Because I want to start off on the higher time frame here. Yeah. So just stemming from the 7 hour alone, right? We've already taken liquidity on the 7 hour, right? We've already broken structure as soon as this candle here started to push as a bearish engulfing candle and kind of close below. So I'm already looking at it to take lows out, especially because of this built up liquidity here to the left. Right, so I was kind of eyeing this out for a while, and as we drop down to the lower time frame, the 4 hour high that has been created would be here. And so again, this was a pretty risky, a trade. Actually, in my opinion, it's pretty risky, right? Because I don't typically enter like with volume of the candle that's already pushing. I will usually wait for some sort of like retest on the lower time frame, or if it does hit a POI, usually I'll place my stops to go above that POI. But in this scenario, this also happened pretty fast, right? Whenever a candle does start pushing pretty heavy, there might not be enough time to get in, depending on how volume is looking. Like if volume is just straight pushing, it's really, you'd have to be extra patient to wait for that retest, obviously, which I could have eventually waited, but then with this structure alone, and price did come up into this, like that's not very clear structure for me to want to enter on that break in retest. Or that area, it didn't look clear to me, right? So in this moment, again, I just chanced it. I saw lows being broken here. I saw price starting to exhaust. And so I knew that eventually I wanted lows to be taken again, right? And so just waiting for that volume to kick in. And once I saw it kick in, especially on the lower time frame here, again, I ended up placing my stop loss above to this previous high, right, on the 5, 3, and 1. And then obviously as price pushed with volume, like once I saw that volume, because this stop loss is not ideal, for me, but my execution was on point. So I waited for price to push down with that momentum, with that volume. As soon as I saw this volume come into play, I quickly moved stops to break even, right? Just to allow myself some breathing room and not having to worry about such a big stop loss, because like even though I marked it up here on TradingView, like this is not how I truly executed that trade. But yeah, I mean, again, it's just a reminder to continue to execute the same way over and over again. You're not going to get the same setups. Like this setup versus everything else that I've shared, this is obviously a completely different setup. Again, it's not something that I would typically take, but I just executed what was right in front of me. Like you have to be able to adjust to different situations in the market based on what is present and in front of your face. So in this case, it turned out to be a win. So it's a win in my book if you can continue to execute your system and your plan, and that's exactly what I was following in terms of like what I was seeing on the higher time frame. But yeah, those are my trade breakdowns.
So that's the breakdown of my June. $30,000 in profits. But remember, guys, it's not because I got lucky or found some sort of secret strategy. It happened because I was actually trusting my system completely and not forcing trades that weren't there, protecting my capital when I was up, and just trusting the process, honestly. And a big one is really just executing the same way over and over and over again that I've done for years. And when I think about it, I actually talk to a lot of y'all who are just getting started or has been struggling with your breakthrough for years. And I think the biggest thing is for those that have been struggling for a while to actually get that breakthrough, it's because you know what to do, but you don't fully trust your system completely. And I feel like that's super, super important. You don't trust it long enough to let it work for you. You overlook really good decisions because your emotions come into play. You're chasing setups that literally aren't there. And you end up giving back your profits by being greedy at the wrong moment. But it's possible to get past all of that. Honestly, everything that you're experiencing is fixable as long as you can adjust and you know where you went wrong. Anyway, I really hope that this was super, super helpful and brought value to those that watched it and really being able to lock in with your system. Let me know in the comments what resonated with you the most, and I'll catch you guys on the next one.